Ladies and gentlemen, welcome back to the channel. Today we had a speech from Fed Jerome Powell in front of the Senate, which really bailed out the markets from a much hotter than expected CPI report today. And I will discuss that with you here in this video. Now, the important thing is, what does this mean for PCE? As Fed Jerome Powell made it very clear, they do not focus on one simple data report. They really try to string together a narrative or multiple sets of data to come to conclusions. And while tomorrow's economic data with PPI is now very important, considering CPI today. I will discuss this all in this video. You do not want to miss this if you are an equity investor, including, well, what Fed Goolsbee said about markets as well today about inflation, the tariff concerns that we have, and what we presume will be a reciprocal tariff announced tonight, if not tomorrow, and much more, including a new budget proposal and a new debt limit increase. There's a lot to get into here in this video, so I don't want to waste your time. Let's get started. Hit the like button and subscribe to the channel. As you know, only about 50% of you guys are subscribed. So if you like markets and you like making money, if you like to stay informed each and every single day, hit that subscribe button. It greatly helps the channel out. And let's get started. Inflation today was really the big catalyst as far as data, and the numbers were not good. Core month over month came in at 0.4%. We were expecting 0.3%, so higher than expected. Last month was 0.2%. Core year over year came in at 3.3%. We were actually expecting this to fall from 3.2% down to 3.1%. Now, headline inflation month over month came in at 0.5% versus a forecasted 0.3%. That was expected to be a fall on a month over month basis from 0.4% down to 0.3%. Did not happen. And year over year headline came in at 3%. We were expecting that number to hold steady at 2.9%. So across the board, worse than expected inflation. I mean, markets are actually doing a pretty good job, holding up. It's not a disaster in markets today by any means, but that was definitely not great. Now, Jerome Powell did testify in front of the Senate again, in which some of the comments that he made could be a reason why markets are doing okay today. I'm not going to say they're great by any means. You have winners and losers in different areas, but they're not a disaster. One of the things that Powell specifically said was, PCE is what the Fed cares about. So he kind of shrugged off the CPI report, and he again said that the Fed doesn't get excited, quote unquote, by one data report. That, they don't draw conclusions or change much based on one data report. And you really need to see a string of data reports for the Fed to start reacting to something. So Wall Street's saying, hey, if this is just the kind of seasonal jump in inflation we get in January, that's fine. If the next couple of months come down again, then we're kind of, back to making progress on inflation, because there normally is a spike in inflation during any normal year in January as companies kind of do their one-time price increases, seasonal adjustments come in. You do tend to get a rise in inflation, but it still was more than Wall Street was expecting by and large. And Jerome Powell says that we are looking for PPI data tomorrow for a read-through to PCE. Jerome Powell again points out for investors and for the Senate that even though CPI was high today, they care about PCE, and PPI is going to be important for their PCE calculations, that they'll basically know what PCE is going to look like next week based on PPI tomorrow. So PPI could be a important catalyst tomorrow morning. Jerome Powell yet again says we are holding rates where they are, awaiting further evidence of inflation coming down. Just moments before the CPI report came out this morning, President Trump says that interest rates will lower with his upcoming tariffs. He says interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll, America. And traders have shifted their next Fed rate cut to December from September. So continuing to delay the next Fed rate cut, which is good in one aspect because that means the economy is doing okay, or at least expecting the economy is doing okay. But again, not really great for easing a Fed policy. House Republicans proposed a $4 trillion debt limit increase today. And Jerome Powell says we are close but not there yet on inflation. And Jerome Powell says in hindsight, we probably could have halted QE earlier. U.S. tariffs on aluminum and steel will cause job losses in the United States, says Canada's Prime Minister Trudeau. European Union's trade chief talks to the Trump team on finding a tariff solution. And the Trump economic advisor, Hassett, says reciprocal tariffs are a work in progress. Conversations with other countries began earlier on Wednesday. And apparently, reciprocal tariffs will come before Modi's visit to the U.S. The White House press secretary Leavitt speaks at the briefing today. U.S. House Republicans propose a $4.5 trillion tax cut. U.S. House Republicans propose $2 trillion in cuts to mandatory spending over 10 years. And also in the news today, Apple is exploring both humanoid and non-humanoid robots for its future smart home ecosystem. And Trump today confirms that he had a call with Putin Wednesday morning discussing Ukraine, the Middle East, energy, AI, and the US dollar, with both presidents agreeing to visit each other's countries. Trump to visit Russia and Putin to visit the US. Fed Goolsbee says today, if we got multiple months like this on CPI inflation, then the job is clearly not done. And Goolsbee still forecast rates settling a fair bit below where they are today. And I think this is part of why the markets did not have a super bad day today. This is not like a disaster kind of a day, even though the CPI report was kind of a disaster, because the Fed's really just shrugging this off. Again, as I mentioned earlier, January does have some weird inflationary effects every year. That's number one. But number two, the Fed's not going to react, or nothing's really going to change based on just one CPI report. So that's kind of the reason why Tesla was not held back today by CPI, or not, doesn't appear like it was held back. The RSP is down 0.62%. There's definitely some pressures out there, but it's not as bad of a day as we would have thought if I told you last night core month over month was going to come in at 0.4%. I mean, yeah, you would expect the NASDAQ, S&P probably be down 1% to 2% at least, and that's not happening. And yeah, Trump's reciprocal tariffs could come by Thursday. That is when Modi is going to be visiting the White House, so that is technically by tomorrow. Now, you can also see the Russell 2000 underperforming, of course, that is to be expected, down 0.80%. NASDAQ slightly green today. S&P is down 1/3%. The Dow is down about 0.5%. And you can see the VIX is down about 1% as well. So some fear is actually being lifted off of markets. So I think that's pretty interesting. 10-year Treasury yields are in fact reacting negatively today. They are up about 9 basis points, almost 9.5 basis points to 4.63%. So definitely some pressure on the bond market, which again, when CPI comes in this hot, you would expect to see that. But I would say overall, it's probably a good sign that markets are not full-blown crashing today on hotter than expected CPI. We can kind of look through some of these issues, at least for now. Now, ultimately, if we can continue to look through those issues, really depends on if, inflation continues to spike. But so far, it doesn't seem to be a big negative catalyst. You also have some earnings today in after hours. You have Reddit, AppLovin, Robinhood, Dutch Bros, Albemarle, The Trade Desk, Cisco, MGM Resorts. Tomorrow is going to be an even more exciting day, in my personal opinion. You have Datadog, CyberArk, John Deere, Crocs, Sony, and others in pre-market. In after hours, you have Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. Now, with all of that said, today the CNN Fear and Greed Index is at 45, which is barely neutral, pretty much in fear, right borderline between fear and neutral. So market's still overall in a pretty rough place. Market momentum is fear, stock price strength is fear, stock price breadth is fear, put and call options neutral, market volatility is neutral, safe haven demand in fear, and junk bond demand currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, that's actually falling about 4% today, down to 45.63%. Again, as a contrarian indicator, normally when markets are bearish, when stocks are low during corrections or crashes, and sentiment is low, it's a good time to be buying. Well, you can really just look at sentiment, because when sentiment is bad and stocks are not doing well, then, well, normally it's a good contrarian indicator to buy markets. And today, you're only at 45.63% of stocks trading above their 50-day moving average. Over half of our markets, 55% or so, are still in an active downtrend. So, that's a pretty bearish number. And as a contrarian indicator, that should, be a good thing for markets, or a good sign for what could be to come. Now, in last week's update, we will get a new one coming tomorrow. 33.3% of investors were bullish, neutral at 23.8%, and bearish at 42.9%. I would argue that maybe, the bulls drop in the report tomorrow and the bears rise. It definitely feels like people are super bearish out there. And that will be fascinating to see coming tomorrow. I will keep you guys posted on what the new survey results are. But with that said, ladies and gentlemen, let me know what you think about this information. I have to be honest, although, things don't look great from the data that we got today, or how markets are necessarily reacting, there's some big winners, there's some big losers today. From a technical perspective, I think things look pretty good. If you can break above this downtrending trend line here, connecting that all-time high on January 24th, the subsequent high on January 30th, and the following high on February 7th. If you can break out above this trend line, that's going to be really good. That could happen here over the next couple of days and would likely send us to new higher levels. You did find support at the 50-day moving average today around $598 per share, so it looks good. I definitely would not bet against a chart that looks like this. So let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.